What's going on, guys? I hope y'all are having a great day. My name is Josh, and I'm going to be going over quite a few little bit of the acronyms when it comes to day trading, whether it's stocks, futures, crypto. Some of just the basic stuff that people just starting to get into trading might want to know what it is and how can you use it to your advantage. And that's about it, guys. If you're new to the channel, please hit that like and subscribe button. It helps the algorithms, and I appreciate it very much. So, I'm going to close my face. Well, I'm going to zoom it in so you don't have to see my ugly face. Alright, so let's start with the first couple terminologies, right? If you're just getting into trading and you start to hear these slang words that people are saying on YouTube and you're not quite sure what they are, I'm just going to give you a slight breakdown. I'm not going to go tremendously into detail, but I'm just going to surface level it, right? So when you hear the word bearish, right, we're in a bearish market, or I'm bearish on this stock, or I'm bearish on the NASDAQ, which we're currently looking at right now. This is the NASDAQ. The NQH5 is, and also the MNQH5. So the MNQH5 is a micro of the regular NASDAQ. So when you hear somebody trading micros, it's just 1/10 the scale of one full-size NASDAQ, right? All right, back to the bearish part. So bearish means you think the market's going to fall, you think the stock or the equity or whatever the case may be, the crypto, is going to fall. If you hear somebody say, I'm bullish on this stock, this equity, this index, bullish means that you think the price is going to rise. So bearish means to fall in price, and bullish means to rise in price. Now, there's another term, two other terms that go along with those two, right? So if you're bearish on something, you're shorting it. You want it to fall, so you want to short that asset. If you're bullish on an asset, you want to go long, right? I'm long, I want it to go high. I'm short, I want it to go down. Bearish long, bullish, bullish long, bearish short, right? Bearish short, fall. Bullish long, up. It's kind of simple. It's kind of simple, right? All right. So the next terminology I'm going to explain. It's more or less an indicator. You could find it on your Trade-of-8 chart. I use Trade-of-8, and it's going to be a EMA. Now, this is the only one that I use. I don't use any other one. So EMA stands for exponential moving average. Now let's go to what an EMA is. Exponential moving average. So basically, it's fairly simple. The EMA is a type of moving average that places a greater weight and significance on the most recent data points. The exponential moving average, also referred to as the exponentially weighted moving average. An exponentially weighted moving average reacts more significantly to a recent price change than a simple moving average. Now, a SMA, a simple moving average, is another term. And the SMA, which applies to an equal weight to all observations in a period. So the three EMAs that I use, the three exponentials that I use currently, right now I'm going to show you on my chart. The green EMA is a 5-period EMA. The red EMA, this red line right here, is going to be a 200-period EMA, and the blue line is a 50-period EMA, guys. So those three indicators I use. I don't use them as a concrete trading tool, but it's kind of giving me a pretty estimated guess on what the market's going to do. And I'll go over on another video actually how I use them. So I just want to get to what the terms mean, right? I'll make another video on how I use the EMAs along with the RSI or the MACD. All right, so the next indicator I'm going to explain is the RSI, which is a relative strength index. So long story short for an RSI is it's going to let you know if that asset is overbought or oversold or kind of in the middle, right? So The relative strength index is a momentum indicator. It's used in technical analysis. RSI measures the speed and the magnitude of a security's recent price changes to detect overbought or oversold conditions in the price of that security. Now I'll go to Trademate and show you what an RSI looks like. So we're going to go to oscillators and we're going to go to RSI, and I'm going to leave all the colors alone. I'm not going to change the period. I'm going to save it. Alright, so now what we see right here is an RSI. Anything above this green line right here, anything above 70 is going to be classified as an overbought instrument, an overbought asset, whether it's crypto, an index, a stock, right? Anything over that is overbought, which means you could maybe start to look forward to the price of that asset to start to fall. Now it's not going to do it instantly, right? You have to have screen time to see what you're trading. Like I specifically trade the NASDAQ, so I know how the NASDAQ works. So I know when to use and when not to use an RSI. So anything below this red line, anything below the 30 is going to be oversold. So we may be looking for a correction in the long, right? We may be looking for a bullish correction because the asset is oversold. So what happens when it's oversold? It's going to start to be more bought, and then it's going to go back to the overbought, and then back to the oversold. So it's fairly simple. I don't use the RSI too much, so I'm going to take it off of my screen. Now the next indicator I'm going to explain is the MACD. What is a MACD? It is a moving average. Convergence divergent is a technical indicator to help investors identify price trends, measure momentum, trend momentum, and identify entry points for buying or selling. Moving average convergence divergence is a trend following momentum indicator that shows the relationship between two exponential moving averages of a security's price. The MACD was developed in the 1970s by Gerald Appel and is one of the most popular technical tools readily available on most trading platforms. And it's also offered by the online stockbrokers. So the same thing with the MACD, it kind of goes along with the RSI, right? Anything that's super high, you might start to assume there's going to be a correction to the lower side. It's going to start to sell off, and vice versa. Anything super long, anything super low down here, right? This is negative 200. That's super, super low. It's oversold. If you use an RSI, it would be oversold. So we're going to start to look for a correction to go in the northern direction. So when it gets down here, you want to go long, you're bullish. When it gets to the very top, you want to go short, you're bearish. Now, like I said, these trading tools, these indicators are not 100% proof. They are lagging indicators. They don't tell you the future. They just kind of tell you maybe this asset's going to go in a certain type of way, right? All right, so we covered bullish, bearish, long, short, up, down. We did RSI, relative strength index, MACD. I still get it confused what it actually means. Moving average convergence divergence. And then an EMA, which is an exponential moving average. That's about it, man. Those are the ones that I use. I do use a couple other ones here and there. I won't name them in this video because I don't use them often, right? I don't use them often. And that's easy peasy. That's it. The way I trade with those couple little things, and also I do trendline. I trendline trade. I look for trends, basically, right? This is we're going down here. This would be a downtrend. I'm gonna draw a trend line. Boom. Look. And then you can also draw a trend line. Whoop, that's a horizontal. I apologize. You can also draw one on the bottom. So if you look at how it acts, it hits the trend line, goes up, hits the trend line, hits the trend line, hits the trend line. So we have two confirmed hits, right? So what are we going to do when it gets up? We're going to look for it to fall back to that trend line. That's kind of how I trade. I also do momentum trading, high volatility when the New York session opens for the NASDAQ. I also trade supports and resistances. So we know this right here, this trend line here, is going to be a key support, because you can see it bounced here, it bounced here, it bounced here. It dipped a little bit below it, right? It's not 100% foolproof. You will have a little bit of slippage there. It goes up, it bounced here, and it bounced here. So trend lines, supports, and resistances are a great key to beginners to start trading, right? Well, that is going to be the end of my video, guys. I hope you enjoyed it. I hope you watched the whole video. I know it's kind of long, 10 minutes, 11 minutes, but I appreciate your time, guys. Once again, if you're new to the channel, please hit that like and subscribe button. It does help the algorithms, and I appreciate it very, very, very much, guys. All right, y'all have a great night. Trade safely. If you have any questions, shoot them in the comment section. You can find me on Facebook. This is my real name, Joshua Del Basti. Shoot me a private message, whatever you want, guys. Y'all have a great night, and I'll talk to y'all later. Peace.